Good morning from Los Angeles. Good morning. It is December 8th, Monday, trading with Sergio. How was everyone's weekend? Well, let's see. I'm hearing some dings and pings in the background, so I must be transacting. We'll take a look at that in a minute. Good morning. Welcome to Trading with Sergio every Monday, 10 a.m. Pacific, 1 p.m. Eastern. Going live on YouTube as well as X. I'm going to post a link for you guys if you want to show up. I want to talk about a couple of important things today. Here's the StreamYard link. Obviously, we'll talk about the Fed interest rate decision coming up on Wednesday, so markets are kind of probably flattish until then. That should introduce some volatility to our markets, but we'll have to see. A lot of people are still waiting for the Santa rally, as today's title of the live stream indicates. I don't think there's going to be that much of a Santa rally because we don't have much left. I think we have how many trading days left? Probably 15-ish, right? With Christmas and everything else coming up, all the holidays. So I think 12. Not sure. Anyway, so if you are trading options, be careful. Count those days. You have New Year's. You have, if you're going with the January cycle, you have New Year's and Christmas off days coming up for the markets. So if Santa rally doesn't show up, look, it's been okay a year. I don't know, about up 14, 15% on S&P 500, up a little bit more, and well, just about the same on triple Qs. So what are we going to do today? Today I want to talk actually in detail about risk and money management, which I think is lacking pretty much with every trader. I try to instill that in my members group. So if you're willing to join the members group, click join, send me an email, sergio@sergioavidian.com. I will send you the Telegram chat group link. What do you get for becoming a member? You get my trades live. Again, none of this trading, financial, or investment advice. What I do is very risky. My account can handle it. Do your own due diligence before following me. They get a members-only live stream every Wednesday, but now we switched it to Thursday for the next 2 months due to my son's high school soccer schedule because I have to go watch him play. So the schedule is every Monday, Trading with Sergio, every Wednesday, Trading with Sergio at 10 a.m. Pacific, 1 p.m. Eastern, and every Friday, Power Hour with Sergio, 10 a.m. Pacific, 1 p.m. Eastern. So good morning. Thank you for joining. As I was saying, I'm going to go through real quick with the weekly macro news that's coming up. Tomorrow, September JOLTS data, JOLTS job openings data coming up. September, look how far we're going back now. Obviously, Wednesday, December Fed interest rate decision indications are that they're going to cut 25 basis points. And obviously, after that, the Fed Powell conference, Fed Chair Powell's news conference. A lot of people were thinking that they're going to cut rates and markets going to melt up. I don't think that's going to happen. You have to understand why they're cutting rates, right? Fed does not cut rates when the economy is firing on all cylinders. So Fed must be seeing something weaker coming up, and the data indicates so. From unemployment levels to credit card defaults to car loan defaults, mortgage defaults actually are increasing a little bit as well. Some indicators actually are at the 2008 levels when it comes to the credit card and auto loan defaults. On Thursday, nothing important, nothing burger. OPEC monthly report. Thursday, important number, initial jobless claim. So we have two really, as far as I'm concerned, market-moving news coming out. Initial jobless claims on Thursday and the Fed decision on Wednesday. If they do cut the rates, please pay attention to the long end and the short end separately, because the short end is being cut with the federal fund rates being lowered, but the long end is not listening at all. Long end is actually going higher. So, pay attention to it. I think the important thing is to understand the dynamics of short end versus long end. So that's the macro that we have this week. You know, we all started cutting rates last September, and we can recall what happened, and then compare the 10, 20, 30-year bonds notes in the US. What has happened to them? Have they gone lower? No. In fact, they have gone higher. So Fed can only control the short end of the curve. The other thing that's happening, that I have 3 videos coming out this week at noon today, at noon on Wednesday, and noon on Friday. There's a lot of talk about Japanese interest rates skyrocketing. I'm explaining in detail, like I have 6 months ago when I first started talking about it. Nobody was talking about it. The carry trade potential domino effects falling apart, but now there is something else going on. I don't think it's going to be the currency carry trade like we had last August, but we have to understand the dynamics of what could happen. I'm not saying it is going to happen, because we may be going to QE, quantitative easing, just in time, and or the buyer or last resort. So the printers will have to start if the Japanese start selling their treasuries to protect the yen, because their interest rates in their own country is skyrocketing. So I'm going to in detail talk about in these 3 videos, 3-part video coming up today, Wednesday and Friday at noon. So if you're not subscribed, please subscribe, turn on notifications so you get the notifications in a timely manner. If you're not subscribed, please subscribe to the channel. If you enjoy the content I put out or the live streams I do, put a thumbs up. It's free. And also share, because I think I'm one of the only channels that talks some sense into what's going on, as opposed to just posting, oh, look at me, look at me. I'm like, no, you know, you have to understand macro. So long story short, yeah, that's what's going on today. I'm pretty sure I got the notifications on my cell phone. So I'm long NEO options, as some of you know, because I post my positions every Monday, Wednesday, and Friday on the community page of the YouTube channel. So I was long 150 January NEO 5 calls, about 39 cents, although I had sold the 5.5 calls against them last week for a couple of pennies. Those pennies matter, and I'm going to show you guys how they matter when I talk about the topic today, which is risk and money management and win rates, because people are stuck on win rates. Win rates means nothing to me anyway, and then I'll prove it with numbers. So you guys hang out with slides, obviously. So I think I'm selling some of those NEO calls at 48, 49, 50, 51 cents. So I scale in, I scale out. My cost basis is about 37 cents, 48, 49, 50, 51, and then I'll keep some powder dry because I sold some 5.5s, weekly 5.5 against the long 5s already today at a nickel. So that's lowering my cost basis some more, and also mitigate the theta decay. But hopefully you guys understand what's going on there. Every other position has pretty much been the same for the past 10 days or so, finishing the year. Get the books straight, take some losses if I needed to for tax loss harvesting. I talked about how you should be thinking about, if you're a trader, especially every trade you make is pretty much short-term, right? Short-term capital gains, taxes you have to pay on that. And then if your other income is pretty high and your ordinary income tax rate, like in California with me, is close to 50% between federal and state, well, you need to do a lot of tax planning not to pay too much taxes. So if you have some losses, I highly recommend you take losses if you're in a high tax state. Yeah, we're gonna do that. So good morning, Doug. Yeah, good morning. You're painting, huh? Okay, cool. So I posted the link. If anybody wants to join, please grab the link. I just ask that you're in a quiet place with a good internet reception, and then we can talk about anything you guys want to talk about. So topic of conversation today. I posted this on X. If you don't follow me on X, it's in the show notes. Please check it out. Topic of conversation. Actually, the person that I just thought about when I was doing this is here, Defunk 1080, who's stuck in BMNU. All right, so pay attention, Defunk 1080. As I've been saying for a year now, since I started the channel, there's investing and there's trading. Okay, so let's put investing aside. I've met many folks who start as traders, short-term swing, day trade, whatever, and then they turn into long-term investors. Why? Because they do not manage risk. They do not manage money properly. What they do is they become hope and pray traders. They get stuck in a trade and they go, okay, it's going to turn around today. It's going to turn around today. It's going to turn around tomorrow. You can't keep going lower. You cannot do this. You cannot do that. You get emotionally involved. You lose all train of thought. You lose why you got into trade to the first place. And I'm saying trade now, not invest, trade. Trading is an art form. If you don't understand all the mechanics that go into trading, from creating a thesis based on facts, structuring the proper trade, manage risk after you put on the trade, because nobody knows what's going to happen. I don't care who says what. I don't know what's going to happen. You don't know what's going to happen the next minute, let alone next day, let alone next week, let alone next month. So a lot of people on X and YouTube go like, oh yeah, we do this, we do that. I'm like, no, show me what you're doing and make me understand that what you're doing is proper, and don't burn other folks with you who have no experience in this game. So my goal is to talk about my mistakes of the past and what I've learned from those mistakes. And then, again, another goal is not to give you a fish, is to teach you how to fish properly. Because if you're out there trying to catch a 200-pound tuna on a Walmart rod that you bought for 20 bucks, and your test line or your line is or can only handle 20-pound fish, you're going to break the rod and you're going to mess up your reel and you're going to lose the fish. So my thing is, like, these analogies have been told to me by my mentors over 30 years on Wall Street, is that not too many people, once they get into trade, manage risk and manage money properly. Now, when I say risk, is you all know what the risk is when you get in a trade, but then you don't turn into a hope and pray trader, right? Oh, it will be fine. I'm like, no, it's not going to be fine. Once it starts getting going, it's going to keep bleeding you to death. And it's okay to take losses. So the topic is going to be risk management and money management. Money management meaning, how big is your account? What it can handle? What kind of drawdowns you should, experience or allow having drawdowns, because we all have drawdowns. If anybody says they never have drawdowns, run the other direction. They're full of shit. So my point in all of this is, there is, besides the 3 P's that I preach, which is patience, position size, and planning, all are related to this. But then one of the most important things that people don't talk about on YouTube or X is risk. What is risk? We have risk in everything. We have risk when we get in our car to go to the supermarket. We have risk to wake up the next morning. Risk is something that people ignore or neglect to understand when they're putting on a trade. What could go wrong with this? Great traders don't think about how much money I'm going to make. The great traders think about how much money can I lose if this goes sideways, and if that happens, where do I stop the bleeding? Because math is very simple in our world, okay? If you have $100,000 account and you push that account down to allow it to get, a drawdown of 50%, and you get down to 50,000, this is the same numbers. Percentages don't lie. It doesn't matter if you have a 5,000 account or a $100 account. If you allow a drawdown of 50%, now you have to double that account. You have to 100% that account has to go up for you to get back to break even where you started. That's that's money management, right? Number one, because a lot of people look at a lot of different things when they're trading. They look at all the metrics that I really don't care about, such as win rate. Well, who gives a shit win rate? And I'm going to prove it to you guys that you can have a 50% win rate and you can have some amazingly phenomenal numbers if you risk manage and money manage. So again, math doesn't lie. So which one is better? Have 100,000 account, draw it down to 50, and then now you're under pressure to double it to get just back to even, or allow a 12-15% drawdown and then just get back up about 18% to get back to an equity new all-time high. I look at my equity. My equity is my scoreboard. How much money did I have yesterday? All of us will have a green day, red day, or an unchanged day. If you have a big account, unchanged days are impossible. So it's either going to be green or red. Well, you're seeing that. You may have 50 positions on. It doesn't matter. They all have their own mark-to-market pluses and minuses against that number. That number is your scoreboard. That number does not lie. We all have that. It's called net liq or net liquidation value, account value, whatever you want to call it, right? So I just trade that. I may have 5, 6, 8, 10, 20 positions on, but they are all contributing negatively or positively every single second of every day. It's called mark to market, as I said. So that number is changing. So I'm going to try to make sure that if that number starts going down, where do I stop this? And in order to stop it, look, you can go flat things like this. It took you 10 seconds to put the trade on. It'll take you 10 seconds to take the trade off, even with a loss. But people are not comfortable taking losses. When people are not comfortable taking losses, okay, that's when they get into trouble. And that comes with risk management and money management. So I'm going to put a couple of slides up, and I'm going to actually debunk the fallacy that's out there that, oh, my win rate is 80%, my win rate is 90%. Who cares if your win rate is 90%? And these are pretty doable numbers actually for everyone. So let me go to the first slide and let's start talking about it. So I went into Gemini, or I think it was ChatGPT, one or the other. It doesn't matter. You can do this on your own, by the way. So here's my prompt that I put in. Let's see if some of you agree with this or disagree with this. I start trading with $100,000, round number. How much money would I have at the end of the year if I gained just 20% on each winning trade and lost 10% on each losing trade? Calculate me numbers over 252 trading days, because there are how many days there are trading days there are in a year, and 500 trades a year with a win percentage of exactly 50%. Exactly 50-50. If I do 10 trades, I'm right 5 times, I'm wrong 5 times. Also allocate only 10% of total capital to each trade. Let me read that again. I start trading with $100,000. How much money would I have at the end of the year if I gained 20% on each winning trade and lost 10% on each losing trade? Calculate over 252 trading days and 500 trades a year with a win percentage of exactly 50%. Also allocate only 10% of total capital on each trade. Okay? Short answer is $1.145,095,019. Let me read that again. We're starting with $100,000. We have a 50-50 win-loss rate. All we're doing in manage it, we're taking profits at 20%. It may be week, month, year, whatever it is, taking 20% and losses of 10%. 500 trades a year is really not that high for an active trader like myself, 252 trading days. And I'm only allocating, if I'm starting with 100, I'm only allocating $10,000, which is 10% of capital for each trade. I would have, with the compounding, 1.15 million, 1.145 million and $95,000. How this is computed: starting capital $100,000, position size per trade 10% of current capital, which is F equals 0.1, because there is a formula for this. Win rate plus 20% on the position per win multiplier, which is 1.02. Losses minus 10 on each position per loss multiplier, 1 minus F, which is 0.99. 500 trades with 50% wins, 250 wins, 250% losses, 250 losses. For the year, your account would be up 1,045%. Now, how is this possible? Well, it is possible because of risk management and money management. That's it. There is no ifs, there is no buts, there is nothing else that goes with it. So, and then I put it on a graph. Here's the deal. Equity curve, 500 trades, 10% goes to each trade, 250 wins, 250 losses, random order, okay? Once the simulations are run, that's what your equity graph is going to look like. And how does that look? Wouldn't you like to have an equity graph like that? That's account equity, folks, okay? Now, I went a little bit deeper, okay? Equity, by the way, this curve is randomized. Now, you can have 5 losses in a row. You can have 10 wins in a row, but then we're just going at the end, 250 wins, 250 losses, okay? And final simulated capital is from 100,000 to 1.145 million, right? Now, the other thing that we can do is play around with numbers, you know? So final capital by position size, 500 trades, 50% win rate. I can allocate only 1% of capital to each trade. Again, we're going with the 50-50, 20% gain, 10% loss on each trade religiously. Whenever we get to 10% loss, we're going to cut it. Whenever we get to 10%, 20% gain, we're going to cut it, right? If I allocated just 1% of my total equity, which is $1,000, because I'm starting with $100,000, I would have $128,322. That's 28%. If I allocated 2% to each trade, I would have 164. If I allocated 5%, I would have 343,000. If I allocate 10%, I would have 1.145 million. And if I allocate 20% at 50-50, 20% gain, 10% loss, 11,610,000. How's that possible? Because the account is growing, your compounding rates are growing as well. Now, on the next slide, I'm going to show you guys that you can even have a losing year, meaning you could have 40% win rate. Forget the 80%, 90%, 100%, whatever these charlatans talk about. So that's the next one. The next prompt I put in is I start trading with $100,000, just like before. How much money would I have at the end of the year if I gained 25% on each winning trade and lost 12.5% on each losing trade? Calculate over 252 trading days and 500 trades a year with a win percentage of exactly 40%. Also allocate only 5% of total capital to each trade. Let's clarify that. Everything is staying the same. Account is staying the same, except the gains are going to 25%. The losses are going to 12.5%. 500 stays the same. 252-day trading stays the same. Now I'm lowering my win rate from 50% to 40%. And instead of allocating 10% for each trade, I'm only allocating 5%. And that's what your graph would look like. And at the end of the year, you would have $182,872.70. That's 82%. Now, wouldn't we all like to do that? And you're going to say, Serge, but that's not easy. How's that not easy? I see on X and YouTube millions of people posting saying, my win rate is 80, my win rate is 90, I never lose, I never do this, I never do that. But nobody talks about this. Show me your account. Because if they are able to do this, if all their win rate is 80%, I didn't even bother to put those in there. If you have win rate of 80, 90% like these fools are claiming, and you're doing a little bit of this money management, your 100,000 will grow into 10 million, 20 million, right? I don't see that happening. That means they're not managing risk properly, right? And so this is the numbers don't lie, right? And notes and disclaimers. I have to say this, obviously. The plot, and none of this is trading, financial, or investment advice. The plotted equity curve used a randomized order of wins and losses, seeded for reproducibility. Final capital depends only on counts of wins and losses, not order, but the path does. Calculations assume each trade return equals position size times gain and loss percentage applied to current account, because it's compounding, right? So all I'm saying to you guys is that if you manage money and if you manage risk properly, even with a 40% gain and only allocating 5% of your capital, your total capital, to each trade, you will have an 82% plus year. Now, can you pick 4 out of, and I also ran the numbers with 30%. The numbers were still positive, not as much. Maybe it was $128,000 with allocating 5%. That means you have to be right 3 out of 10 times, but you have to take the 20% gains and you have to take the 10% losses religiously. Or in my case, starting next year, I'm exactly going to do this. Now, how do you achieve this? How do you find these winning stocks, right? Because a lot of folks are stuck on the same stocks, NVIDIA, Palantir, SoFi. There's 10,000 stocks. I talked about that on a video I put out yesterday. right? How do I pick my winners? Well, I trade the 52-week high list. The odds of you getting stuck on a 52-week high list stock or buying it buy high and sell higher is really, you got to be the unluckiest person on the planet. Plus, I'm only allocating 5 or 10% of my total equity to each trade. So I have dry bullets to shoot or dry powder to use at all times. And the account should get to where it gets to. If I'm right 4 out of 10 times with using the 52-week high, buy high, sell higher situation, as opposed to getting stuck on BMNR because some fools on X are talking about it nonstop, like there is no other stock on the planet. There's 10,000 stocks. Go create a watch list for yourself and trade those stocks. Why do we have to trade why do we need to get influenced by these jokers on X or YouTube or whatever? There's no other stocks on the planet. I'm telling you guys, there's 10,000 stocks between Amex, NASDAQ, and New York Stock Exchange. Go trade those. And I didn't even calculate this with options. Now, if you're going to trade options directionally and use the same formula, maybe you change your numbers. Maybe you go for 40%. Options are leveraged. Obviously, you can go 40% gain, 20% loss. But you must do that. And if you're right 4 out of 10 times, you will double your money. So my point in all of this is most people do not risk manage and money manage. You have to do it on an hourly, daily basis. Okay? So I hope this was helpful for you folks, because win rates are meaningless. Meaningless. Absolutely meaningless. You could have an 80, 90% win rate, and you have one killer trade that wipes all that out, because all you're doing is taking small gains, and then one big one wipes all that out, right? But these fools don't talk about that. They all talk about, my win rate is 80%. Fool, if your win rate is 80% and you apply some sort of money management, you could 10x your account every year. But they don't talk about it. But I talk about it because it's reality. Numbers don't lie. You have to apply some sort of risk and money management to your life. I mean, you're trading, you're investing, whatever that you're doing. Again, investing is a different story. So I think this is very near and dear to my heart, that you need to have a system, obviously, right? Because they call it an edge. I don't know if anybody has an edge these days in these markets, but you need to have a system, right? Once you have a system, okay, can you pick 4 out of 10 winners? Can you have 4 out of 10 winners when you do 10 trades? 40% win rate, your account will go, and you allocate, like I showed you guys on the slide. Let me repeat that one more time. Here it is. Okay, here's the prompt: 100,000 starting value, 25% on each winning trade, 12.5% on each losing trade, 252 trading days, 500 trades a year, with a win percent of only 40%, and we're allocating only 5%. That means 95% is sitting there. Can you be right 4 out of 10 times? And if you apply this money management, you will have 82% year. And there it is. There's the graph. And I don't see these types of graphs on X, by the way, when these people post, because on the first drawdown, their account goes down 50%. So my point in all of this, you must apply money management and you must apply risk management. If you don't, you're going to get killed. You are going to get killed. So good morning, everyone. Let's answer some questions, go to positions, and then I'll answer some more questions. So a reminder, every Monday, Wednesday, and Friday, I'm going live at 10 a.m. Pacific, 1 p.m. Eastern. If anybody wants to show up, here's the link. You can show up and we can discuss whatever you guys want to discuss. That's the link of StreamYard. All I'm asking is you're in a quiet place with good internet reception. And please put a thumbs up if you enjoyed. Please share. I think today's you should definitely share, because it is definitely possible to double your account with just being 50% win rate. You don't have to put the pressure on you to have 80, 90% win rate. You just don't have to. Now, day traders do have to do that probably, but I don't day trade. I swing in position trade. Good morning, Nuri Chicago. Good morning. The Funk says, I appreciate the help. I'm not trying to help you, bro. I'm just trying to guide you that you don't ever do what you did again. My plan is to assign the first 15,000 shares and sell 13.5, 14.5 in a potential ETH bounce January to March. Well, you're hoping. What if it doesn't happen? You watched the video about volatility drag? What if it goes sideways? What if BMNR goes sideways for 6 months? You know about volatility drag, right? So because you're, again, you see, you're thinking positively. What if Ethereum drops to 25? What's your plan? 2,500 and BMNR drops to, I don't know, 25 again, and BMNU is at 5. What is your plan? Because you're still bullish. What is your plan for the other side of the coin? I don't think you have one. I don't think you have one. Yeah, very successfully, until it's not successful. Selling puts is not risk-free. And you can say, how do you sell puts on BMNR successfully? If you sold puts at 70, 65, 60, 55, I'm not sure. But you don't need to have more wins, man. You have to have money management. Hopefully you watch that, little episode there. Think about it. Think about all those trying to get more winners into your account. You don't need it. You need 50-50, but you just manage money properly, which obviously you didn't do. Well, we talk about that. Sizing big is every trader's nightmare. Well, for the future, if you survive this thing, yeah, do that. I don't see anything negative about that. Anyway, yeah, I agree about this. You're using prize picks have a better chance of picking winners of guys scoring their average, and picking average is not going up and down. I'm not sure I understand that. Let me read that again. I agree, but this year using prize picks have a better, not necessarily, Mr. Gambit. I don't know if you trade or not, but achieving 40% winners, 4 out of 10 winners is not that difficult in the market. I'm not talking 80 now. 80 is very difficult. 40, no. This year, my account is at 52%. Picking winners are going to, well, you just have to money manage and risk manage. I mean, the numbers don't lie. Well, no, there are a lot of things you can use for stocks to go up and down, and I talked about the 52-week high list and all these things, and there's much more. It's more involved than just shooting darts or shooting darts on a board. It's much, much more involved than that. I mean, luck plays a certain part, obviously, but it's not luck. I would say luck is needed, obviously. Okay, Joshua, you're gonna go to YouTube jail. Adios, Joshua. You're a moron. Anyway, so what are we going to do? We're going to go to the position screen. Let's see what we sold. Hopefully you guys can see that. Positions have not changed that much, really. Same Strive leaps, 425. Now I added 25 at 20 cents. 425, 2.5 leaps going out to January 2027. I still think Bitcoin is going to have a rally. So this is my lotto ticket for 2026. I'm tied up in BMNU many different ways. Finally, Thinkorswim adjusted the price. It says 835, but my true cost is 878. Stock is 854. I have sold calls, 8, 9, 10 calls, 8, 9, 10, 11 calls against the 3,500 shares, but I've also sold naked strangles. I sold the 511s, 512s, 611s, 612s. Those are going to expire worthless. They'll expire on December 19th. I am long 5,000 shares of Blaze AI at 243. I sold the December 3 calls against them. Stock is 241, so we're good there. Oh, that's what we did. Yeah, we sold NEO. I had 150 calls. I sold 50 calls at 48.49. And I sold this morning 50 of the weekly, expiring on Friday, weekly 5.5 calls against the long side. I have more sell orders, I'm pretty sure. Yeah, I have more sell orders at 51 cents. So my cost now is 37 cents. Last week I took in 2 cents, it's 35. 5 more is 30. So I'm lowering my cost basis. And hopefully we'll get a little pump on NEO. And last but not least, I am long Sharpling Gaming, 210 calls, going out to January 2026, 15 calls. Those I will have. I've been managing by selling short-term calls, obviously, against them. So not much is going on. How's the market doing? Yeah, we have a red day going. I should have worn my red hat, right? Yeah, we're selling off. We attempt to bounce, selling off again. And Ethereum and let's see where we are. Where is Ethereum and Bitcoin? Bitcoin is a 90,222, Ethereum 3,100, Solana 135. And yeah, BMNU is fine. It's just every day it's collecting money. I have still tons of extrinsic value left in the strangles, obviously, and the cover calls. And then if nothing happens, if the stock is here, let's say, for example, by December 19th, anything is possible. If I get called away, it's a beautifully 10,000 plus trade, profitable trade. If nothing happens, they all expire worthless. I lower my cost basis tremendously. I'll do it again next month. As next month, I'll sell 8, 9, 10 calls again, and then I'll do some more naked strangles because I want to establish a little bit bigger position on it. Yeah, everything is fine on that one. BZAI, we'll see where it goes. NEO, obviously, it's a short-term trade. You know, I bought them at 39 cents average, 150 of them. I sold 48.49. This morning they got up to 52. That's about 30%. So maybe I should start applying the same risk and money management to options. So if I were to apply that to options, what I would do is obviously options are leveraged, so you have to increase your numbers. You have to go maybe, 50% gain, 25% loss, and the numbers will be astronomical if I could do that even on a 50-50 basis. So we'll see. But next year, that's what I used to do that. And then, you just go away from your stuff thinking you found something else with an edge. No, man, you got to stick to what works anyway. What else? Yeah, that's about it. Those are the positions. Let's go through some charts, Max 7 stuff, and then if you guys have questions, I'll answer it. This is SPY. A lot of people are saying it's not topping again. I don't know. We'll see what happens. MACD is plus above 0, but if we do, I don't know what's going to happen this week, honestly, with the Fed decision coming up. The market's heavy. Look, the Japanese yen stuff is definitely hanging out there. Not the yen, but the carry trade crisis, especially with the Japanese interest rates spiking still. 30-year hitting 3%. 3.5%, 20-year hitting 3%, and 10-year hitting 2%. The liquidity seems like it's not there. Obviously, you can't put on a carry trade today because of the rates shooting up in Japan. So that's like less liquidity, and that's why the market's not going, because when they put on the carry trade, money came here, bought bonds and or stocks. So this is TLT. Look at TLT. It's breaking down. Actually, rates are going higher while the Fed is cutting rates. And last September was the first one. We can go back to last September. Actually, September. This is 2025. So last cut happened September of last year. You guys recall, right? And since then, TLT has not gone anywhere. In fact, the rates have gone higher. Here's triple Q. Nothing going on. Some of the Max 7s. Apple pulling back to 20 MA, which is fine. I own Google in my long-term portfolio, so that's fine. Some of the high flyers, obviously, Hood. Everybody's, it's getting into resistance now. 140, I'll probably a seller. SoFi, same thing. Just consolidating. They did their secondary. They finished it. I'm watching Fastly to get in. Just consolidating. Open, I think, is going to have a big move once this consolidation phase is over. I usually don't draw lines on my charts, but that channel is absolutely valid. Once we break out of that, I think we could have an explosive rally on Open. Not that I care about the fundamentals of the company, but sometimes you have to put that things aside. Palantir is rallying back up to resistance. NVIDIA, same thing. But again, there's 10,000 stock, folks. Don't get stock. My 52-week high list had 70 stocks on Friday, which I put in. On a list like this. And here's the 52-week high list. I'm going to show it to you guys, and then I'll show you guys the 52-week low list. Even on a market going, so this is the 52-week high list, and then alphabetize it, and then put it in order the way you want it, obviously. And I put the video out on Sunday, so you guys please go watch it. That's the 52-week high list right there. Not the Russell mid cap. We want the 52-week high list. This is the 52-week high list. There we go. And I put on my parameters on it, and then alphabetize it. That's the 52-week high list. This is the 52-week low list. Look how many stocks are hitting lows. Tons, right? If you like shorting things, obviously. And here's the 52-week high list. And if you, and there you go. Alphabetize it A through Z. I don't know, there's endless. Like there's probably, this is 10, 20, 30, 40, 50. So each page about 40 stocks, and there's 3 pages of it, 120 stocks. Pick those. You'll have an easier chance of making some money with those than trying to pick bottoms and tops or trying to catch falling knives. So that's NVIDIA. Another stock I really liked. I missed buying it though. It's UiPath, PATH. Yeah, I mean, here's Ethereum. This is the Ethereum ETF. I mean, it bounced into resistance. MACD turned up. I'm not sure if it's going to survive or not, but it's still under 0. It's in a downtrend, folks. You guys can do whatever you say. It's in a downtrend. We test its potential. We bounced to the middle band. We, technically speaking, obviously, 200 EMA is turning down now. That confirms the downtrend. The death cross has happened. 50 going under the 200. It's on Bitcoin, IBIT, right? So, you know, a lot of people are like bullish for it. I don't know why. They're just in permabulls. This is MSTR. This is BMNR. Nothing going on. What if BMNR goes sideways for another 3 months? What's going to happen to BMNU? Not much is going to happen to BMNU other than volatility drag, and it's going to keep going lower. What am I looking to enter? Honestly, not much. Keep the powder dry and then finish the year strong and then start battling again. Yeah, that's about it. I mean, I created the watch list with the 52-week high list. I can give you guys some examples of that stuff if you guys want. Just a few names. So you can do this on Robinhood. You can do this on pretty much every platform. Just create a scanner. There we go. Okay. Today there are 61 stocks on the list, and on my Think or Swim, my parameters are set a little bit more different. So, you know, I'll just go through some names. ADI is in there. There's your 52-week high list. Deal with these stocks, folks. Don't deal with your HIMs and all the same bullshit stocks that everybody talks about on X. There is ALMS, MCore Technologies. You know, these are not small companies, by the way. Just trade the 52-week high list. Avago. There's a multi-$100 billion company making a new high. AXTI. There's one. AXTI is AXT Corp. Look at that. I mean, just gotta trade. A lot of bank stocks are in there. Citicorp, Bank of Mellon, Bank of New York Mellon. Obviously, these, you can see the rotation when this kind of thing happens, and nice and slow and steady. You don't even know you're getting a correction in these. Even when the market pulls back, they just pull back to support, and they rally right away. A lot of pharmaceuticals. Carvana is put in the S&P 500, 455. I cannot believe that's a $62 billion company selling cars out of popsicle machines, but you don't argue with the prices. CTRI, there you go. Just trade with 52-week high list. It really is going to be very difficult for you to pick a top, the absolute top on a stock. Even if you do, after the pullback, it'll give you a chance. These are all uptrending stocks, basically. That's all I'm saying. Find the uptrends. How do you find them? 52-week high list. That's it. And you're sort of dealing with the same goddamn stocks that everybody deals with. Okay? I mean, I don't know what else to say. Even GM keeps hitting 52. This has been in the list for the last, I don't know, like 6 weeks now. Yeah, it may not be as exciting as your NVIDIA or Palantir or whatever. Okay, so what? So what? Morgan Stanley's in there, obviously. A lot of biotechs. UiPath is in there, of course. Why wouldn't it be? The Ross stores, even some retailers are in there, which I wouldn't think it would be in there. There is Ross stores. Dollar General is in there. Amazing. Like, I wouldn't have guessed Dollar General or Five Below. That was in the list. There's Five Below. Dollar General is in there. Dollar Tree is in there. What's the symbol on Dollar Tree? DLTR. Look at that. Right? Okay, so that has a red day. It had a 52-week high list on Friday. Now you consolidate and then you get on. I mean, that's why you have to create a watch list with limits, with alerts. There's SVRA. There's energy, a lot of energy stocks in there with oil on its ass. Unity Software, a stock that I doubled in my long-term port. It's up. Oh, yeah. That's been in that list for a long time. Ventus, VTR. I don't even know what the company does, but it doesn't matter. It does not matter. Warner Brothers is in there. A lot of, like I said, bank stocks and just create a watch list, man. That's it. Just deal with these. Deal with uptrends instead of trying to pick bottoms. And that's what my recommendation would be for all the people who want to manage money better and manage account equity better and 50% gains. Let's aim for that. Let's aim for 50%, 50-50. And manage money. Up 25%, you get out. Down 12.5%, you get out. Doesn't matter. Just try. And at the end of the year, if you're 50-50, allocate 5% of your capital. Okay, just 5% to each trade. And manage money. You'll be fine. What else is there to say? Da, 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 da. Let's answer some questions. I'll go have a cup of coffee. Sergio, do you see a good strategy by puts on and calls at the money, same expiration on the stock that is expected to sell others? Yeah, that's a straddle. Depends, but then the market makers, before earnings, they pump the IV so much that you have to have this massive move. Or the next day, next 2-3 days, IV crush is going to get to you, especially if the stock doesn't move. So, yeah, you can straddle it. You can buy the same puts and calls. If the stock is at 40, earnings are coming out, buy the 40 puts, 40 calls. But then market makers are not stupid. They're not there because they're stupid. So what they're going to do is they pump IV, right? Now you can go out a month or cycle, maybe 2 cycles. If you think after the earnings for a month or 2 period, you're going to have a much bigger move coming up, then you can put on a straddle with those strikes and expirations, and then you don't have the decay that you have to deal with. But if you're going to do a short term, you better be right, and the move better be massive within a week or so if you're going to do it with weeklies and things like that, but look, I mean, things happen when earnings come out, stocks start moving the right direction, up or down. One side will print and the other side can go to hell, doesn't matter. And then you can start, selling some calls against your long calls. You can sell some puts against your long puts. You can do all kinds of things. But a straddle is definitely a trade idea that once in a while I'll deploy. I really don't use too much of it. How would I structure a trade around the ticker that's 52-week highs? Synthetics, sell puts, buy calls, just like buying the stock or buy the stock. If you don't have the funds, then do some synthetics. Definitely I froze. That's fucked up. Am I back? I think I'm back. Maybe. What is happening? I think I'll close. Again, couldn't. All right. I think I'm back. All right. Oh, what happened to all the comments? I had some good comments. Shit. What happened to the comments? They disappeared. Can you guys put the comments again? Because there was one. How would I structure? So I would structure. Now that's going to be stuck there until that comment comes again. Goddamn StreamYard. That's how I do it. Yeah, synthetics. You can sell up a credit spread and buy a call with it. You don't have to put money out of your pocket. I always think of the downside, right? Instead of doing this, I mean, if you're really strong on it, if you're just coming off a base and breaking out, sell the put, buy the call. You got to make some directional bets, man. All this fantasy land that people are in. Oh, sell puts, buy calls, everything. You just print money. I'm like, yeah. All you need is one debacle, and then those sell puts, sell calls giving you ulcers. Well, we have a candidate here for an ulcer for that. So how do we get rid of that comment until the new comment shows up? I don't know. Does anybody want to join? I'll post the link one more time. Here's the link. Okay, I saw your last one about Kimberly Clark. Look, man, you're telling me some fundamental stuff that everybody knows. It's not like you're the only one that knows. Yes, I do accumulate crypto. In fact, I DCA'd again this morning. I do it. See, a lot of people always talk about their wins. Great. Awesome. I turned 5K into 30K with Cardano in the past, but I can't find anymore. Well, what happened to you during the altcoin crash? I don't know. Anyway, yeah, congrats. Yeah, I do accumulate crypto. I only buy Bitcoin. I DCA Bitcoin every Monday. I've been doing it all year. And I bought my first Bitcoin in 2020, didn't touch it until it became a more institutional based, and the new, obviously, administration is very friendly to crypto. There was no reason for you to be in crypto other than to buy and hold whatever you had, because SEC was against it, all this, but now we have all these ETFs. I'm not talking about the stats are doing what they're doing, but crypto is institutionalized now. BlackRock and iShares and all these things, they have all these ETFs. So it's not going anywhere. because the risk was government saying, banning it or saying something that, okay, this is bullshit or whatever, then, you know, your crypto goes to zero. But I only do BTC, but then I trade the proxies of crypto, like the DATs, digital asset treasury companies. I don't touch MicroStrategy. I don't touch BMNR. I mean, SBAT, I like buying things at a discount. SBET is 0.85 MNAV. I've done videos about that. You have to go educate yourself. Otherwise, don't get into it. I think you were the one asked about Kimberly Clark. I don't know if I can get into the charts now. Well, let's see. Yeah, we can get into the charts. We definitely can. Okay. Let's take a look. Kimberly Clark. I'll put this up. And then we go here. Charts. KMB is the symbol on there, right? Yeah. Yep. Bro. I'm talking to the guy 52-week high, showing me a 52-week low. I couldn't care less about these types of things. Charts, anyway. Not a chance. In my investment account, I may care about these. I'm not trading. Let's see. UPS is, I'm looking at my long-term port now. UPS going sideways. Bought that a week and a half ago. Lulu was having a big down day. This in my long-term port. Still up a little bit on it. Google, I'm up 100 and almost 200%. So I'm not going to touch any of the stuff. Go for 1 year, 1 day. I'm looking at Rocket Mortgage to add. Actually, I started looking at Netflix to add as well. Yeah, maybe we get down to maybe we get down to 85 range, somewhere around here. Yeah, then I'll take a look. Now be patient, folks. When something is in a downtrend, doesn't mean you buy it and it stops there. It's probably going to go lower. Fastly, I'm definitely looking to buy. Just high-level consolidation. Again, investment account, right? And I have Kava. We're coming back nice on that. Still down about 10%. Yeah, I mean, yeah. Anyway, so no questions? No more? Nobody wants to come on? So please, I'm gonna do a video about what I talked about today. Money management, risk management. You could be 50-50 and double your account. Okay, so don't fall for the people who go, oh, my win rate is 70, 80, 90, 80, 100%. Who cares? Just manage money properly. You can be at 90% and have a Meta hit you with 150-point sell-off. We had many, right? Or Oracle hit you, 350 to 200. Right? I'm just, I don't pay any attention to any of these people anyway. But then I know a lot of people do follow these people with influence, supposedly. They're gurus. And, you know, none of them show their positions. I have 80% win rate. I'm like, then your account must be up 5,000% this year if you manage properly, if you manage money properly. But, you know, they all put their totals. I'm like, and then first drawdown happens, market sells off 5%, and their account goes down 40%. And then they're all in shock. I'm like, yeah, you're holding 4 beta stocks with no protection. Not genius to take out. Now, after a 40% drawdown, you have to go up 80% to get back to even. And because market has done that over the last 2-3 years, right? Because nobody understands the market can go down and stay down. Everybody thinks the market goes down and V-bottoms and then goes right back up. I'm like, oh, one time is not going to do that. And all these folks are going to be recycled by probably perma bears, and then balance people will be like, okay, yeah, we've seen this movie before. So, yeah. Anyway, all right. So I finished my hour. I'll be back on Wednesday. Please check out the videos that's coming out today, Wednesday and Friday, talking about the interest rate situation that's going on around the globe, specifically in Japan. Everything is explained in detail. Hopefully you guys will understand it. And Wednesday, trading with Sergio, 10 a.m. Pacific, 1 p.m. Eastern. Friday, Power Hour with Sergio, 10 a.m. Pacific, 1 p.m. Eastern. And please put a thumbs up if you enjoy it. Please share. Oh, last but not least, please, actually, you still have time. It's 11 a.m. At 12 today. Another newsletter is going out from my website, which is www.sergioavadian.com. It's a free newsletter. Help me improve financial literacy in this country for everyone, from elementary school to college kids, because it's lacking. It's horrible. There's about 11 or 12 articles on the blog, on the website. Website's new, a couple of months old. And please go subscribe. It's free. I don't have Discord. I'm not selling you anything. I just want you to improve financial literacy for yourself as well as for your loved ones. And it's really well done. I don't know what the article is. My website manager knows. I write the articles and he makes them look amazing and then puts it out. So noon today, another article is going out to all the subscribers of the free newsletter. WVE is up 130. If I buy puts on it, I don't put advice. I'll take a look at it though if you want. Why would you buy puts on it? It's up 132%. You think it's going to pull back? Okay. WVE. Okay. The Wave Life Sciences. I'm not sure why I mean, I don't know why I would buy puts on it. It's your call, man. It's your money. Why don't you sell some calls? I'm sure IV is pumped. That's what I would do, but risk is a lot with that. Obviously, they don't have their weeklies, so December's. They're not really trading. Let's see. I mean, yeah, they're not that active. You would think they'd be more active, especially out of the money calls. I don't know. I wouldn't buy puts on it. Who knows? These things have like usually 2 to 3 days left. I have no idea what this company does. So, what puts? Stock is 17, hit 20 already. Look how expensive they are, man. They're 175 IV. Yeah, look at the bid and ask on some of these. 20 calls are $1.50, $1.60. And then everything else is like a nickel bid 5 offer. There's no liquidity. I don't know. I mean, you can't buy puts on this thing. You can if you want, but you're paying super high IV. You know, these counter trenders I do once in a while, but when they get going, they get going. 10-minute, 10-day. I don't know. Wouldn't be my favorite trade. WeWap is coming up. So probably go sideways, probably go higher. Again, not trading financial or investment advice. It's your money. I'd rather sell calls than buy puts. But again, I rather sit. How about that? All right, folks. I'll see you guys on Wednesday, Trading with Sergio, 10 a.m. Pacific. Thank you for tuning in. Please share. Please put a thumbs up. My YouTube manager says it helps. Please check out the videos coming out today at noon and noon on Wednesday about the potential Japanese carry trade part 2. And please share this live stream today. I'm going to make a video and put it out probably next week with what I talked about today. Win rate means nothing. Risk management and money management is everything. So those numbers don't lie. You can go double check it, fact check it if you want on Gemini, Grok, or ChatGPT or whatever. It's really, really not that difficult. But what people do is they don't like taking losses. For example, this gentleman who's stuck in BMNU, if he just took that 10% loss, where would he be? you would be in a much better place, mentally, financially, in every which way. And you know, the other thing that you're doing by just getting stuck in a position is opportunity cost, right? A lot of people don't talk about that either. Maybe I'll talk about that in the future episode. Opportunity cost is massive, right? You're just stuck in something, you're trading the same damn 10 stocks. While in the other universe, rotation is happening and there's like 100 stocks every day making 52-week highs because the money is flowing there. The advantage, even if you don't trade those 52-week high list stocks, you're understanding rotation, right? So if you look at that last, a lot of financials are in there. I don't see anybody talking on X or YouTube about Goldman Sachs that's making a new high, Morgan Stanley making a new high, B of A making a new high. Yeah, they may be boring. So what? Money is money. You're going to make your 20% there, as opposed to you make exciting 20, 30, 40, 50% on NVIDIA or lose that. You just make a boring 20%. It's okay. Numbers don't lie, folks. Anyway, my hat's off. Vamos Barca. Barca forever. And I will see you guys on Wednesday.